One of the biggest mistakes an investor can make is not having proper insurance coverage on their properties. So if you are listening, I hope you are covered. Okay, so today I am joined by Roger Newman, not just an ordinary public adjuster. He is who we use when we have an insurance claim. You might not have a claim today, but it's great to learn how using a public adjuster can help you to get the maximum compensation for your losses. Hi, Roger.
Hi, Pete.
So this show is pre-recorded, but I just want to tell you that we are recording it on Roger's birthday. So happy birthday to Roger.
Thank you.
And
Thank you so
please
much.
give the audience a quick introduction, and then we're going to go into detail what you do.
Sure. My name is Roger Newman. I'm a licensed public adjuster and building consultant, and we help insureds when they file property claims to make sure they're getting properly paid for their claim. And we help try to expedite that process and move it along as fast as we can by helping the insured, document the claim and present the claim in a fashion that gets the insurance company to pay the funds as soon as possible.
So I met you several years ago. You were introduced to me, and you guys have a title, public adjuster, right?
That's correct. Yes.
So can you explain to the audience what a public adjuster is?
Yes, absolutely. We are licensed by the states. And so every state that we work in, we have to be a license. We have to go back through a background check and all that stuff to be licensed by state, just like real estate agents, just like yourself. And through that process, what we actually end up doing is we come out and actually measure and document the loss for the insured. And we do that in an insured's point of view instead of the insurance company's point of view. Insurance companies love to collect premiums, and if you've ever filed a claim, they don't like paying claims. They'll come out and usually make you a lowball offer. It's just the nature of negotiating, really, at that point. And it's the system is gamed against you. They hire professionals to go out and measure and document the loss from their point of view. Mm-hmm. and offer you a settlement that's not necessarily always what you need to restore your property. That's where we come in.
Yeah, so the insurance company goal is to pay as little as possible for a damage, a claim.
Well, yeah, think about their business model. They make money when they collect premiums. They lose money when they pay claims. So, I mean, it's not hard for someone to figure out that you're on the losing side of their business model when you file a claim.
Something I was really fascinated by is when I have a damage to my property, I call you, the public adjuster. You go out, you do the work for me. I can get more money, but your pay is regulated.
Yes, very regulated.
So to me, that's a win-win.
Absolutely. I mean, when, most of our clients, I'd say 90% of our clients now are all investors like yourself. And they range from, some of our investors are single family home investors. And then a lot of them are also commercial investors, investing in shopping centers, office buildings, shopping malls, malls and schools, like private schools, as well as, storage facilities, multifamily properties, you name it. And we step in, and the main thing we have to do when they call us first before I ever even file a claim. And what we highly encourage that because we want to look at the policy and look at the coverages and advise our client before they ever file a claim if we believe they're going to be successful at collecting the monies on what they're claiming. And sometimes, I advise clients all the time, especially in the, like the multifamily and the hospitality sector, that you don't file a claim for $110,000 if you look at your policy and you find out you have a $100,000 deductible. It doesn't make sense because one, you're not going to collect any real money, and two, all it's going to do is create a strike against your claim, and your premiums will end up going up unless it was a natural disaster, and then they're still going to raise premiums across the board for everybody because of the amount of money they're having to pay out. So I highly encourage to make sure you're actually filing a claim that you're going to get paid for. Of course, if it's caught on fire and you got a mad fire, you're going to file a claim, but not being proactive. If you're going to be reactive in the claim world, that's exactly what you're going to be doing. You're going to be like like the cat chasing your tail. Instead of being proactive, the insurance, a lot of people don't realize by your insurance policy, it's your responsibility as the insured to make demand for your claim. It's your responsibility to tell the insurance company, hey, look, guys, you owe me $10,000, you owe me $1,000,000, whatever the number is. It's not their responsibility to come out and say, here's a blank check. Tell us when you're done, because that's never going to happen. A lot of people wait until they get an estimate from the insurance company, and then they realize, wait a minute, I can't do all these repairs, and this doesn't cover all my damages. And then they really start looking, and basically by that time, sometimes you're already behind the eight ball a little bit, because they've already kind of got their mind set on what they're going to offer you or what they think your claim is worth. As you know, expectations are very large in everything. So if you allow them to set the expectation that they only owe you, say, $10,000 when they really should be paying you $100,000, well, now the challenge to move that to that real number becomes a much greater challenge than if you present them with a claim for, say, $110,000. Then they go, oh, okay, this is going to probably be a $100,000 claim, and they're going to make the reserves and things like that accordingly.
Well, I don't know if you remember this, Roger, but the first time I ever used you on a claim, obviously I didn't know you existed, right? So
Right.
I did file the claim myself for a flood situation. And with your help, I got twice as much as what they originally offer.
And that's
And
not unusual to do 100% improvement on a claim. We had a claim that Eddie Gant referred me to. It was one of his clients at Jet Investor Lending. They had a property out in Halesville. I won't mention their name. I'll just talk about the numbers because some people don't like their business shared. But the insurance company originally offered, I think it was around $4,300. And after they applied deductible and depreciation, they wrote her a check for $903. And we were able to go out and turn that claim around, and we ended up collecting her right at $53,000. So she's seen a 900% ROI on her investment by hiring us to handle the claim. And everybody in real estate understands those are phenomenal numbers. I mean, I'm a real estate investor myself, so I just love the work that we do and helping clients, especially young investors. I mean, think about this. I mean, if you are a young investor and you're in your first one or two or three properties and you suffer a major loss and you're not fully compensated, that could just really drive you completely out of the real estate investing circle completely, because you'll be thinking it's just not for you because you lost money on a deal, and
that's
nobody
right.
wants to lose money. I mean, number one thing is preservation of capital. That's what we need to do first, and then make money. But if you're not preserving your capital by getting underpaid on a claim, it could have a detrimental effect, just not to you, but your whole family life downstream. Your kids and your grandkids. Because we're trying to help people, like build a dynasty, make the next generation easier.
But the part that, like I said, I still see a lot of value in what you do is this. So back to that claim, right?
That's it. Absolutely.
Let's just throw a number. I think they originally offered 70, and you guys went out and it went up to 140.
Yeah, if I remember right, it's something in those
Yeah.
ranges. Yeah,
And I mean, you have incentive to, try to get as much from me as possible because
absolutely, because we work
because
on a contingency basis. I mean,
it
so
works for both of us, right? I mean, I
absolutely.
get more money, you also get more money, but see, here's the thing. You have regulations on you have to take the lesser of and remind me what the lesser of, the two ways that you get paid
Yeah,
is.
so when we're working on a claim, the main thing we really focus on is it's a win-win. Okay,
Yeah.
so if the insurance company is offered you a dollar, whatever that dollar amount is, we
Yeah.
want to make sure that our fee structure is a win-win. We don't want to come in, for example, and you have a claim for $10,000 and we only move it, say, to $11,000. Well, we're not going to charge you 10% on that. We're just going to reduce our fee on that and take a much lesser a slice of that pie. And then, but once you get to a certain number, though, like yours or anybody else's, most of them, I think we only had to discount our fee on a few claims last year in order to not be detrimental to the insured. We want it to be a win-win. So if we move your claim only $1,000, our fee is going to be very minimum. But when we move your claim from $10,000 to say $50,000, we're only going to claim we're like by law we're only allowed to charge 10% of the total claim. So our fee would only be $5,000. 10% of the total amount of the claim, and that's pretty much where it is everywhere. Now, some states have different regulations, so we have to do that. Some states are hourly bill. There's a few states out there that requires us to do hourly billing, but most of them are allowed us to be like an attorney percentage, where an attorney works on you know. A compensation plan where it's they collect you $10,000, they get a slice of that pie, and our slice is just 10%. So it's a win-win for the insured and us. We're able to operate on those numbers and be successful at it, and be able to help insureds.
Well, I hope your phone's not ringing off the hook after this and you're going to get so buried in claims now, because I truly, really see a lot of benefit in what you guys do. I mean, all I do is, hey, Roger, this happened to my house, and turn everything over to you. I'm sorry for this interruption. I've been asked a lot about passive investments, and I understand that there is nothing passive about being a landlord unless you can find a great property management company. So if you own an Airbnb or a short-term rental and you are looking to free up your time, contact our team at Buzz Vacation Rentals at 281-549-8432 or check out their website at buzzvacationrentals.com. Thank you, and back to the Real Estate Baller Show.
Absolutely, and we've even now started a new program where we're actually monitoring properties. So people send us their list of their rental properties or their multifamily or the hotels or whatever they have, and we put those in our database. And now we monitor those for weather events. So we get an email if there was an adverse weather event at your location that we're monitoring. Then we go ahead and schedule a time to go out there. We'll call you and say, hey, V, you had some bad weather. We're going to go out there and take a look at your property, and if there's some damage out there, then we'll notify you, and we'll start the claim process for you. And it makes it easier for you. And the way I look at it is, we're just another part of your toolkit. Every investor needs a group. You got to have your bankers, you got to have your private lenders and people like that, and your hard money lenders, as well as you need a real estate agent. You need an insurance agent, and then you need a public adjuster along with everybody else. You also need maintenance guys and painters and everybody else, right?
Yep.
So we're just another part of that group. And I kind of look at when I'm talking to investors about claims, I was like, it's not all it's like a teenage driver. It's not if you're going to ever have a claim, it's when you're going to have a claim. So there's no doubt that you're going to have one eventually, but so you need to be prepared for it. And we do free policy analysis. So if you have a property and you're worried about your coverages, we'll now analyze your policy and give you the feedback and tell you where we think you need to close some gaps or get some endorsements in place on that policy. A lot of agents, there's a lot of really good insurance agents out there that sell policies, but they don't handle claims. And we don't sell insurance, we just claims. So I tell everybody needs to stay in their own lane. A good agent will sell you a good policy without a lot of holes in it. You don't want your insurance policy to look like Swiss cheese when you go to file a claim, because that's how your claim is going to look like too. They're going to shoot holes all in your claim. And you don't want that. So, but some agents out there, there's good, bad, and ugly. And there is some agents out there that just sell a policy based on the dollar. And then those policies are very detrimental to investors if they're not fully aware of what they purchased. And that's the biggest thing I see. Some of them don't realize that they may only have a $5 or $10 or $20,000 water limit on their policy, and it's not brung up. But you buy a $500,000 property, and you only got $20,000 in water damage coverage. You spring a leak, you're on vacation, your dishwasher or something like that, and you come back and your whole first floor or second floor of your house is all flooded. You got $100,000+ claim there, and a $20,000 limit's not going to get the job done. And that agent is not the agent you want working for you. You want an agent who's going to advise you accordingly and make sure you're selling you the proper coverage and not a price. People get in trouble when they buy price. You better buy your coverage, or you're going to find out if you're paying little today, you're going to get paid little tomorrow when you do
That's
that.
right.
And that's a big thing. And a lot of people don't realize that. And that's
So Roger, you work with hazard, flood, and windstorm claims, right?
any type of insurance claim on property or on personal property. So what I mean by that is so it's we handle dwellings. If it's your home, we'll come in and handle the claim. We'll handle the claim on your dwelling as well as your personal property claim. So let's say a house flooded or it caught on fire, things like that. Whatever type of claim you're having, if you have the coverage for it, we come in and manage that claim on your behalf. We'll come in and actually measure and document all the damages to your dwelling. We look at not just the interior damage. We will also address all the mechanicals, which is your electrical, plumbing, HVAC, your exterior, and then the so we always look at what I call the fifth wall, which is the roof, your exterior envelope, your windows, because if you don't have a good protection, then nothing on the inside is going to be saved. If you have a leaky roof, you're going to have problems on the inside. So we want to make sure we fully document the claim from the outside in, and then we also come in and evaluate all the interior finishes. And like I said, a lot of people don't realize that some of the damages are hidden, and if you're not experienced in being able to identify these items, then you're not going to be able to present a claim to the insurance company that actually covers all your losses.
Do you work with both homeowners and investor or just investor only?
No, we work with both. It also depends on where they're located. I mean, if you're in Houston, because we're based in Katy, and just like you're a Houston based and company, and so we handle claims for homeowners in Texas, and it depends on where they're at and who they are. Don't get me wrong. If Eddie has a property in Mississippi, it's his mom's house or something. Just because Eddie's a good friend and a great client, I'm gonna go over there and handle that claim, whether it's a money maker for us or not. It's because we take care of our clients and I like we run about a 98% referral business, so we're heavily referred. So we take our clients seriously. Our relationships are real serious with that. So we want to make sure we're doing everything we can to help them, and because our referral partners is really how we generate our clients. We're actually getting ready to start doing some new things on some all the social media stuff. I've been very blessed that we hadn't had to do that. I say blessed, or I don't know if that's the right word, but now we're actually getting into doing that. And actually, I'm going to launch a podcast also, and it's going to be called the National Claims Post. And I actually kind of got the name from a couple of guys that they're heavily involved in real estate and lending, which was used to be called Think Big and Work Small, and then they changed their name to the National Real Estate Post. And these guys are really talk about how lenders and real estate agents have to work together, because if an agent's not selling a property, nobody's writing that loan, and vice versa. Nobody's writing a loan if somebody's not selling a piece of real estate. And so it's that market, but they're more on the like the homeowner market, not necessarily the investor market, but it's the same in both markets. Like your real estate agents and your lenders are working hand in hand. And I think that your insurance agent and your public adjuster, it should also be a part of that circle. Because you need everybody. When you buy a piece of real estate, you have to get a title policy on it. You'll make sure you have clear title to the land, just like you buy hazard insurance. Because if you have a mortgage on it, well, even if you don't have a mortgage on it, you should have hazard insurance, because you don't want your investment dollars just burning up and going.
I mean, honestly, I think that's one of I hate to say the word dumbest, but biggest mistake that people make when they think the house is paid off and they don't need to have any type of protections on it.
Exactly. It's like, say, okay, I got all this money in the bank. I'm just gonna leave my PIN number out so everybody can go get it. I mean, literally, if you have a claim and you don't have insurance on that asset. Now, don't get me wrong. I think sometimes there might be a place for that. Like if it's an old dilapidated building and you're not really using it, and the land is worth more than that shack you have on it, then yeah. If the building is only worth, say, $25,000 or $50,000 or something like that, and it costs you $5,000 a year to insure it, well, then I can see but I always look at it as if you can't recoup that money in 7 years through an investment, then you better insure it. It's the 7-year rule I use on real estate too. So it's, unless you just got a lot of money. But we all say that fools and their money is soon departed. So if you're not insuring your assets to value, then you may end up one day finding yourself that became a really depleted asset overnight.
Now, so I use you every time I have a claim. However, can you think of a scenario where it wouldn't make sense to involve a public adjuster? Hey, if you are enjoying this episode so far, don't forget to hit that subscribe button.
Yeah, there's a couple of times. I mean, I look at claims. That's part of the free claim valuation we do. So if you got an offer from the insurance company, I say send it over to me. Just shoot me a copy of the estimate they sent you and a copy of your policy, and we'll review that. And based on the damages, I mean, I've told in the last 20 years, maybe two or three people that they didn't need help, or maybe a handful. It's not very often, but every now and then, I mean, if they have like I met one out on a property, and it was a roof claim years ago, and the insurance company adjuster had went out there and wrote a decent estimate, and actually was paying. I mean, could have added a few $100, but I mean, he didn't miss it by thousands and thousands. Yeah, it was a very small amount, even under $500 or something like that. And when I looked at it, because the insured, the homeowner, was being told by the roofer that oh, I need a lot more money than this. And when I looked at it, I analyzed the numbers, and I'm like, no. So the adjuster shows up, and I tell the homeowner he didn't really have that much damage, and the adjuster on that particular case was actually being very, very nice, I should say. He was allowing coverage that was. It was there, but it was very minimum, but he was allowing for the coverage. And that's why I told the insurer, I said, hey, you should just shake this guy's hand and say thank you. Because the guy was really doing him a solid. But that's been many, many years ago. Nowadays, it's more of is the property a total loss? If the property is a total loss, if you have a building insured, for example, in Texas, Texas has a law that says it's called liquidated demand. So if you have a building, let's say you have this building insured for $100,000, right? And it's going to cost over $100,000 to rebuild this building. Well, it doesn't really matter if it's going to cost more than $100,000 or not. But let's just say hypothetically you have it insured for $100,000 and it burns to the ground. The Texas law is they owe you liquidated demand damages in 5 days, unless they suspect you of committing arson or something like that, and then they can have more time to investigate the claim. But if you have a building sitting completely on the ground, there's nothing but ashes there, and the only kind of claim that it actually applies to is a fire policy. So if it's a wind damage, it's not necessarily the same unless the building is completely gone. So if there's nothing there left to rebuild, by law, they owe you the liquidated demand of that limit of the policy in 5 days. And if they don't do that, then you probably need to get a public adjuster involved. But if they agree to go ahead and pay you in writing, I always say make sure you get everything in writing, because you don't want to hear somebody say, well, that's not what I meant. Put it in writing. If they put it in writing, they're going to pay you policy limits, then you don't need to hire a public adjuster because you're going to collect the policy limits. Now, but in some cases like that, you still may need to, because you may have code upgrade coverage that's available. If you have personal property or business personal property at that location, they're not going to pay you policy limits on those items. You'll have to go in and prove up your personal property, like you had desks and computers or whatever you had, or your home, you have, your beds and things like that. But you'll have to prove up those parts of your claim. And that means you have to go in and actually submit, old photographs or stuff you got. We've done searches for people's product that, their property, not product, that they had, and we had to go back and look through old Facebook pages, old photo, have everybody in their family or friends send pictures from, birthday parties, because everything's gone.
Yeah.
So just like right now, your background, or in my background, I got a picture from the rodeo committee. Actually, I bought this. It's one of the students for the Houston Livestock Show and Rodeo. This was an exhibit art, and so while I buy this, I'm on a rodeo committee also. Houston Metro Go Texan Katie, and so we raise money for scholarships. So this was this is an item. So it's I think I paid $800 for it. But just like you, what's behind you? You got desks, you have furniture, things like that. Well, if you don't have the receipts that they got burned up, then you have to go back, and what we do is recreate the claim. So we have to come back and put all this stuff together by old photographs and stuff that we get from family and friends or business associates, and put the claim to the best we can, so we can actually prove up the claim. And that's a really daunting task when everything's nothing but a pile of debris there. But believe it or not, you can actually go through a pile of debris and pick up stuff and go, well, that was a ceiling fan, or things like that, by the old carcasses that are left in a fireplace. Those are the worst, I think. Well,
are you guys regulated state by state, or?
Yes, absolutely. So we have to be licensed. Like, we have to go through a background check, just like real estate agents do. You get the fingerprint, make sure you're not a bad actor. Then we also have to do continuing education. So we have to do that, and we have to you have to study and pass a state administered exam, just like a real estate agent does. And to me, I believe that's where it starts. That doesn't make you a great public adjuster or a great realtor just because you went and studied and you studied all the state laws and you know what you're not supposed to do. Basically, is the training. It's not really train. I don't think it's really a training for on the job. I think you learn
Yeah.
more in the field in any prospective trade or profession than you do, just in the classroom. And then they're teaching the apple, the principles. But you really got to get out there and hone your trade. For me, this is a lot. It comes off easy to me. It's not really that easy, but it comes off easier to me because today's my birthday. I'm 59, and I've been working. I started out as an apprentice carpenter, and so I'm a tradesman also. So I'm a carpenter by trade. So I know how things are built. So this really helps me in adjusting claims. Some of the adjusters you meet nowadays, they got out of school or they might have been doing something else. I use they were selling shoes yesterday and today they're adjusting claims. Don't expect them to be really good at what they're doing, until they have years of experience. They're not going to know, just like anything else. It just takes time to, hone your skills. But back to the, licensing and everything, we have to do the continuing education classes. As a building consultant, before I became a public adjuster, I've wrote hundreds of millions of dollars in claims, probably close to $1 billion now or so. I've seen a lot of different types of claims, from lightning strikes, hurricane damage, floods, tornadoes, explosions, collapse. I tell everybody I think I've done just about everything except for earthquake and tsunamis, and I'm okay with not doing those. Because I don't want to be anywhere you're going to have an earthquake or a
Or a
tsunami.
volcano. No volcano, no earthquake, right?
No earthquakes. I haven't done any earthquake damage. I mean, I've seen some. I would go on and take on some of those claims, but I'd have to do a lot of research on the what happens to the structures when they're shaken like that.
Yeah.
I think that plays a big part, and I'm sure we would be able to document the damages because just like when a building shakes during a hurricane or a tornado, it's probably pretty similar to a building being shaken by an earthquake. So, and I'm just using that as a similarity. I'm sure I'll get a lot of pushback from a lot of public adjusters or building consultants that's done a lot of earthquake type claims. But, main thing is you got to inspect the structural integrity of the building first. And as long as the building hasn't lost its structural integrity to the foundation or the piers and beams system and the exterior, envelope, the exterior wall framing, as well as the roof framing decks and things along that line, and I'd need to bring a structural engineer in on something like that, and which I do from time to time on different types of claims, to basically prove up the insured's point of view of the claim. And that's our number one thing there, is make sure we don't miss anything. So anytime we run into any kind of we better bring somebody else in, then we go out and seek that person and bring those in. And I've had a relationship, over the last 40 years. I know a lot of people in the industry that do a lot of different things. And so I'll give you an example. I did a claim years ago on a grain elevator that was damaged by
On what?
a grain elevator.
An
So
elevator.
yeah, so it's those, they got these big silos and they got these big pipes goes up to them, and inside those pipes there's like augers, like a drill auger bed, if you know what those will look like. And that's what actually pumps the stuff up to the top of the hopper so it drops inside. And so we had some damage to some hoppers, and I've never worked a hopper claim before. I never even built one, but I knew the right questions to ask. I went to the manufacturer, found out who the manufacturers were of the augers and the different products, and and I actually used that from a prior experience. I had a company in Fort Worth called Hayes and Schultz Industrial Manufacturing that I did a roof claim for back when I was in doing construction, and they manufactured all kinds of agricultural equipment. So I called them, and they were like, "Hey, no, we don't do that." And they remembered me from the claim back in the 90s, and they're like, "Hey, Roger, you need to talk to these guys," and referred me to the guys that I needed to actually be talking to about those augers and the cost of replacing those items, and helped me process that claim, and get a settlement for the insured that they were very happy with.
That's amazing.
Yeah, I mean, so it's everything's different. There's no. My wife tells me I work too much. I tell her this is my sandbox. I just love what I do. I like helping people not get cheated by insurance companies, and I say cheated at, you know, also look at the business of insurance. Their business model is to collect premiums and pay as little as they can
Right.
on claims. That way they can make a profit, just like any other business model.
Yeah.
So you can't really hate them for being in business, but you better know who your opponent is. And because when you file a claim,
Yeah.
when you're paying them a premium, there's no adversary type relationship at all. It's a love relationship. They love you because they love collecting that premium. But as soon as you file a claim, you automatically go into an adversary type relationship.
Mm-hmm.
Because now you're asking the guy, the fox guarding the hen. You're actually, you got the fox guarding the hen house. They're not going to give up. They don't want to give up that money. Not saying they won't. I mean, but they can be persuaded to. But they're not going to just come out there and just, like I said, hand you a blank check and say, "Yeah, just let us know when you're done."
Yeah. No,
Yeah.
it's funny you said that because I was at a conference, a couple years ago, and the guy who owns the insurance company in front of the group said, "Hey, don't use a public adjuster." And
Don't.
I'm like, "Yeah." He said, "Don't use a public adjuster."
Hmm.
Well, I mean, of course he would say that, right?
Well, yes. This is an insurance agent.
No, the owner of the insurance company, the
Oh,
insurance
owner of the insurance.
provider.
Oh, the writer. Okay. Yeah, of course they would tell, no, you don't need to use a public adjuster. We're here to take care of you. And
Yeah.
I always tell everybody if they're spending a lot of money to be on TV and they got their little jingles out there, like you're going to be in great hands and they're a great neighbor or you're in good whatever it is, you better be careful. If they're spending billions of dollars on advertising, they're not spending that billions of dollars on paying claims, and that
Ah,
should be it.
amen.
So
So let's change the pace a little bit here.
sure.
Filing claim is never fun, but do you have a story, maybe a fun story about a claim that you can share with us?
A fun story about a claim. Oh boy, there's
Or
a lot.
maybe a crazy claim?
I don't know. I mean, the main thing I'll look at in claims is, I'm very blessed. We get to make some really good relationships around the country with people and helping them, and we use those relationships across all, boards of helping other people. I think, some of the craziest stuff I've seen is, when insurance companies nowadays they're moving away from sending adjusters out that have experience. They're sending out inexperienced people, like they're using companies like I think it's Hancock, and some other Ladder Assist. There's a few of these companies, and what they do is they go out. These guys are not licensed adjusters. They're not licensed to be an adjuster for the insurance company. They're definitely not a public adjuster. So they're not licensed as a staff adjuster or an independent adjuster. But they're going out and they're climbing on people's roofs. They're saying they're looking for damage, and these guys are trained to, I guess maybe not document everything. And they go out and they'll pick a place on the roof and they'll do a little square, usually like a 10 foot by 10 foot area. And then they marked out, like for example, for hail damage, and they'll mark inside that little square and they'll say they make 4 or 5 marks. Well, it doesn't meet their what they call their threshold, which is a imaginary threshold, because you talk to one adjuster, he needs 7 hits. You talk to another one, he'll say he'll need 10 hits in the square in order to total it out. And I don't buy into that. Damage is damage. And so I had done an engineering on a hotel in San Antonio years ago. And so they go up and they mark their what I call the no-no square. So they go up there and they mark out their little 10 by 10 area, and he finds 4 or 5 marks. And so and then I said, okay, go ahead. And they're like, well, we're going to break for lunch. They're going to go, really what they want to do is they want to go have a powwow and talk about how probably not to pay the claim. These guys are not known for being very good at documenting claims, and from my perspective, anyways. But so they go, and so when they leave to go to lunch, I stay there and I mark the whole side of the roof. So I mark all the damages. And so then they came back, they had their little no-no square, I think with 5 marks in it. But the entire one side of that slope of that roof, I found 298 impact marks. And so when he comes back, I meet him and I said, so what is your recommendation? He goes, well, we're going to recommend repair. So then I take him to the other side of the slope of the roof and I show him all the hit marks. I said, so your professional engineering opinion is going to be that you're going to recommend that my client does 298 repairs on this one slope, correct? Because I'd love to see you and I'd love to see them defend that in court. I mean, if they're going to stand on a witness stand and say that somebody can do, almost
Yeah.
300 repairs on a single slope, I
Uh-huh.
think they just lose all credibility. That's just not right. It's not right for the insured to have insurance companies hire, uh, you engineering firms that are not straight up. And we have this conversation about engineering companies all the time. I always tell everybody, yeah, when you're hiring them, they're going to write a report that that favors you, whoever's hiring them. So I can tell them, hey, look, yeah, you can hire an engineer. The insurance company sends an engineer out. Well, then I can send an engineer out. My engineer is going to go out and I'm going to say, look, document all the damages. Tell me exactly what we're looking at. I don't want to know anything. I just want to know the facts.
Mm-hmm.
And where sometimes there's been several reports over the years that's came out where adjusters have told engineers, hey, yeah, when you make the changes to that estimate or that report, I'll go ahead and pay your bill. This is well-known facts. It's been blown out over the years. There's a big deal out of Florida, Mississippi. There's a lot of these deals have gone on, and in insurance claims, the insurance companies a lot of times will try to persuade clients to take less than what they're owed
Mm-hmm.
by throwing the old fraud card out there. Well, you could be committing fraud. And I'm like, fraud goes both ways. If an insurance company comes out and offers you $10,000 when they really should be paying you, say, $100,000,
Mm-hmm.
aren't they defrauding the insured?
Yeah.
It's wrong. It's wrong both ways. I mean, we don't want to present any. We're not going to present a fraudulent claim. We're going to go out and measure and document the claim, and we're going to present the claim on what we believe is the right path to restore the property. Now, whether they agree with the path and the means and the methods of the restoration estimate that we put together, now that's debatable. But
Mm-hmm.
so is the one that they put together. So
Yeah.
does that make it fraud? I don't think so. I think it's a matter of opinions. And engineers are like anybody else, they're going to give you their opinion.
Right.
And sometimes those opinions are not straightforward. And beware of that. And I try to make sure, like I talk to our engineers, they even ask me a few times because they've worked both sides. And like, what do you want the report to say? I'm like, anything that you can back up in court.
Mm-hmm.
I just want to know what you can, I just want to know the facts. If don't go out there and tell me the building needs to be, bulldozed if you can't back that up. And the main thing there is your credibility. You got to make sure that these guys you're hiring and bringing in have credibility, and they're not just saying, oh, I need to bulldoze the building just because don't get the claim paid, and it'll just create you more problems. You better have somebody that knows what they're doing.
So, Roger, what are the three biggest things to watch for when someone is filing a claim?
Well, before you file a claim, the first thing you should do is, first thing before you ever have a claim, you should review your insurance policy and your coverages first. And if you don't know what that really is, I used to tell people, I was like, okay, did you read your policy? Well, people don't want to admit they didn't read their policy, and it kind of comes across as being, not necessarily the nicest way of saying it. Let's put it that way. So now I've learned to say, when was the last time you reviewed your policy? And I usually get a straight answer that way because people don't want to admit they didn't do something. And I understand that.
Yeah.
We're just that way.
Most of us are trusting, right? We trust that the insurance company or our insurance agents give us the right thing, right?
Okay. But I think the biggest thing there is, people just don't want to admit they didn't do something, and so
Uh-huh.
I just kind of say it now. It's like, hey, when's the last time you reviewed your policy? And some of them will go, man, I've never read that thing. Or some of them are like, it's been a long time. And that's really what I need to know. Because I really need to know if they know what they have.
Mm-hmm.
And in order to start the conversation. So the first thing I do is like, okay, the first thing we need to do is look at the insurance policy. And I'm a big sports guy. I love football. And so I look at the insurance policy as our playbook. You got
Yeah.
to know what your game play is, and if you don't have a game plan going forward, if you don't have an action plan, if you don't know what your policy covers, what it doesn't cover, where you're limited in coverages and things like that, then you're not going to know how to present that claim in order to make sure you recover all the dollars that you can. Some people call this maximizing recovery. I don't really think it's called maximizing recovery. I think it's getting everything covered that the policy allows you to be paid for.
Yeah.
It is maximizing your coverage, but that's not the way I present it, and that's not the way it should be presented. It should be presented in this is what you're entitled to collect based on the policy you have. And by knowing the rule book and by reading the policy and analyzing the policy, insurance policies are tricky. So the policy has a lot of language in it that says we owe you for this and we don't owe you for that. And they're generally anywhere from 60 pages to about 120 pages long, depending on what kind of property coverage you have. And it's a lot of boring reading if you're not from, and it's a lot of that. It's a lot of the give and take. Like I said, we owe you for this and we don't owe you for that. Well, when you start reading, you go, wait a minute, I don't know what I'm getting covered. I don't know what's covered and what's not
Yeah.
until you start really learning to analyze those policies and understanding the coverage applied. You're at a disadvantage because you really don't know what you got coverage for. And then a lot of policies will have what they call forms and endorsements attached to them. And these forms and endorsements can increase your coverage, limit your coverage, or do away with the coverage that's already in the policy altogether. So the devil's in the details. So the coverage analysis includes all forms and endorsements because you really need to know what the playbook is, like I said, in order to present a claim that will achieve the results of indemnifying the insured based on the coverage and the damages, of course.
So read what you pay for.
Yes, and as a matter of fact, what I encourage clients to do also now is when you're getting ready to insure a property. And matter of fact, I'm getting ready to start doing a TREC class. I believe we're going to see about getting a class set up for TREC, so we can go out and talk to real estate agents and discuss what the coverages are and what the insured needs to do, like when they're buying a home or buying a rental property, what they need to look for in coverages, and basically like a questionnaire to their agent. Hey, is my policy going to have these? And what I highly recommend is to create a shopping list of what you want your policy to cover. And then you email that to your agent instead of being on the phone, because in the phone it can be, well, I didn't remember talking about that, or whatever, and you may
Yeah.
not get the coverage you need. But when you put it in writing and you send it to the agent saying, listen, I need a policy that covers this, this, and this, and I don't want any exclusions. And any known exclusions, I need to know about those before you send me the policy. So that will help cover you in the event that the agent sells you a policy, like you say, hey, listen, I want water damage coverage, or I want I want an endorsement that covers repeated leakage from inside the walls, because most policies, for example, if you have a leak for more than 14 days, it's excluded because they look at that was like you're deferring maintenance. And that may not be the case because you may not even know about it. But just because you don't know about it doesn't
Right.
mean the insurance company owes you for it. So if you have a claim, where I had one over in Port Arthur, it was on a home over there, and they did have a repeated seepage and leakage endorsement on their policy, and that little bit of premium they paid, like $35 a year or whatever it was, allowed that claim to go from being denied to being paid for over $100,000 for that $35 in coverage. I can't emphasize to make sure that you have the right coverage. And that was an older home, and pier and beam construction, wood floors on top of diagonal 1x8s, and it had caused damage to not only the wood floors but the subflooring underneath it and the piers because of the leak. And this was in the bathroom and it went into the kitchen, so it was quite a bit. It was quite an expensive claim to repair all that. If you go in and start tearing out a floor in the kitchen, well, now you got to remove the cabinets, and it gets expensive. And that's where that claim went. And thank God they had that endorsement, and we got the claim paid.
I love to read, but reading an insurance policy is not on the top of my list. So
I've never heard them referred to as a bestseller.
I cheat a little bit. So I would read the declaration page and then I jump to the exclusion just to make sure, the things that I want to be covered is not excluded. But now what you're saying, I'm going to start reading the endorsement part too, just to make sure I cover myself.
Well, absolutely.
Okay, Roger, that has been wonderful. Last question of the day. How does the audience get in touch with you?
Oh, absolutely. My cell. Everybody calls me on my cell, and I give it out willingly. It's 832-794-8104. Roger Newman, a licensed public adjuster.
Thanks for tuning in to learn the valuable role of public adjuster with Roger Newman. We hope that this video has been informative and helpful for you. Don't forget to give a thumbs up and share this episode with a friend or a colleague who can benefit from Roger's expertise. Also, consider subscribing to the Real Estate Baller Show for more real estate investing content and other fascinating topics. Thanks again for watching. I look forward to seeing you in the next video.